And if everybody's like having laser eyes and saying it's going to the moon, you probably want to hold off on your dollar cost averaging for a bit because people are, over enthusiastic. Most people in financial markets are just smart people who love, generally who love to look at the world and look and assess change and opportunities. And most of them start to see this as a change and an opportunity. I mean, most people aren't going around saying, well, we need to stop this. These guys are coming after our jobs. They're like, oh shit, this is happening. I need to get into this because if not, I'm not going to have a job, but this is amazing. There are more senior people in the industry at the very top who don't like it because it's their business that's being threatened. But every day I see that changing. I recently gave a talk and Jamie Dimon was in the front row, who's the head of JP Morgan and was a very anti-Bitcoin person. He was taking notes at the front, leaning forward, taking notes.
Mm-hmm.
So the world is changing and people are changing and people are understanding. So we're seeing the investment banks like Goldman Sachs and JP Morgan adopting this. People are saying it's inevitable. So I think that attitude from the financial system, from the kind of old guard, is slowly going. Because they're also seeing a brain drain of people just leaving the industry, saying we're going to this new parallel future and it's more exciting. And then the people who've made the move, people like Mike Novogratz and Dan Moorhead and all these guys have become extremely rich doing it. Richer than, the people who are in the financial system.
So when it comes to the future of Bitcoin and maybe we'll say like the Lightning Network and the future of Ethereum, like where do you see that going in 10 years?
The next phase for Bitcoin is being used as a long-term investment asset for, let's say, there's these things called sovereign wealth funds, and they're generally countries that have stuff like oil that's going to run out eventually. What they do is save some of the excess money that they make for the future of the country. They're called sovereign wealth funds. Abu Dhabi have them, Singapore has them for different reasons. Those people are starting to wake up and say, this is a great asset for our future population's wealth. So they buy it and own it. So that's a trend that will happen. We will see some countries, smaller countries that have problems with their currencies, holding it in their reserves. And we will see borrowing and lending layers like we're seeing with Luna right now, using the collateral of Bitcoin for their stablecoin. So that's what I think about Bitcoin. It'll be that kind of pure vehicle for long-term savings and wealth holding. And that'd be for governments, countries, corporations, people. So the Lightning layer allows us to transfer money quickly around. Is that any better or different than using other ones? I think in 10 years' time, we'll have this conversation. You and I will be using all sorts of applications of which we won't even know or care what blockchain they're on. And they'll probably go across 6 different blockchains. We don't care. So I think that Bitcoin over time is, in 10 years' time, it's probably a, $50 trillion asset or so. So that's a, 50x from here. Maybe it's less, maybe it's $20 trillion. But the whole space, it's going to be $200 trillion. And it's currently $200 trillion now, as all of these different things get built out across all sorts of different ecosystems. And they all start interrelating and being interoperable with each other. There are some people that I've seen who are really skilled at buying and selling stuff short term. It is really bloody hard. I hardly know anybody at all of the world's most famous hedge fund managers who use that strategy that really made wealth. There are some. The real wealth is made by spotting something that is got a long-term secular trend ahead of it and investing in that, and then not doing anything but just keep investing in that one theme. So in this case, let's say it's Bitcoin and Ethereum. We've talked about the role they both will play. So in 10 years' time, the probability of these being a magnitude higher in price is huge. So what you want to do then is it changes your mindset. you say, well, every time it sells off like it did, over the last year, it's been down 50%. Well, I should be buying it because my expected future return has just gone up. Because let's say something's at 100 and you expect it to go to 500. So that goes up 5 times. If it's fallen to 50 and it's going to go to 500, it's now going to go up 10 times. You make double the amount of money. So you should be really happy to see these sell-offs over time, because it means you can buy more cheap stuff and gives you a higher return for the future. But you just look at the long-term trend, and the way to look at these things, because if you look at the long-term trend on any normal chart, you go to TradingView or something, they all look like this. So it's not easy to look at. You use what's called a logarithmic trend, where it changes the scale, and then you can see these beautiful long trends emerge. And Bitcoin fit perfectly. Amazon was the same. Google was the same. They're all the same. You just find this, and then when it starts getting down to the bottom of that trend, it's a really interesting place, unless something has fundamentally changed and that particular token is not as robust, or it may be failing because of the community or the utility that it's offering. But with ETH and Bitcoin, it's pretty straightforward. And then it takes all the stress away, because what you're saying is, I don't want to access my money for 10 years. As opposed to, well, I'm going to buy and sell this, and I'm going to buy a watch, and I'm going to buy a holiday with this, and before you know it, you take too much risk because you can't afford your holiday, and then you have another bet, and then you've lost money, and it's a bloody shit show. What you should do is say, listen, I want to be able to afford a great house in 10 years' time. So my route to this is by investing in these cryptocurrencies, and I'll just do it over time, and I won't even look at how much my money goes up and down. And that's what I do. I just don't look at my P&L, my profit and loss. I just think, can I put more money in? And because I'm just thinking it's a long-term trade, it doesn't matter. It's like, we don't look at our house price every day. And like, has it gone up? Has it gone down? What do my neighbors sell for? It's like, that's stupid, because you're in their house for 5 years, 10 years. And so you think, okay, well, over time, hopefully it does okay. I mean, when Bitcoin was really going up, everyone was putting these laser eyes and counting every 1,000 in price. I'm like, please don't do this, because when this happens, bad things happen. I always say, when you think your shit smells of roses, you're going to get your face rubbed in it. And that was exactly what happened, right? It collapsed. And the other one is, it's like monkeys throwing poo at each other when the price is down. Everyone hates each other. Everyone hates everything. Everyone's an idiot. It's all going to zero. Can't you see? It's ridiculous. But that's what, it's human emotion, right? It's kind of an amazing thing to see it, because it's all over Twitter. And you need to step back from being sucked in to the extremes of the community. So if everyone's really bearish and they all hate each other and they're all picking on each other, and the Bitcoin guys are picking on the ETH guys who are picking on the Solana guy, that it's probably somewhere near the low, because everybody's losing their shit. And if everybody's like having laser eyes and saying it's going to the moon, you probably want to hold off on your dollar cost averaging for a bit, because people are, over enthusiastic.